welcome to this session on the introduction to audit. Let's go ahead and discuss what exactly is audit all about, and let's see some of the basics in audit. This particular video is going to be useful to understand the introduction about what auditing is and what will be the fundamental principles using the audit for both CA intermediate, CA final, of course CA IPCC and all of it, right? So in that context, now we're going to discuss about what exactly auditing is, and the premier body for auditing in India is the Institute of Chartered Accountants of India, and they have given us a definition for what audit is all about. Let's go ahead in picking up that definition and let's see how it works. What exactly is audit? Now always remember, whenever you're picking up definitions, you got to catch up with these four very important questions of what, why, who and how, and of course sometimes it also talks about when. So depending on these 5 questions that the English language raises, it's easy to raise those questions and then join all of them to make a very valid and meaningful definition. Let's go ahead and see what is the definition of audit. What is it all about? An audit is a independent examination. So the key word to catch up here is about independent. Audit is a independent examination of what? Or the independent examination of financial information. That's what we're talking about. What is an independent examination of financial information, which is the second word that we need to understand what it is. Of an entity. What are you talking about when it is an entity? Now please understand, audit is an examination. Okay, so nobody told you that it will be done only for a profit making organization, or it can be done only for X particular organization, Y particular organization. There's no rule like that, right? Can be done for anybody, whether profit oriented or not, irrespective of its size or legal form, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon, with a view to express a opinion thereon. So only 4 parts to the thing. So the first question is, what is audit? Of what? Audit is an independent examination of what? Of financial information. Of who? An entity. What kind of an entity are you talking about? Is it profit oriented or not, irrespective of its size or legal form? Last question is about why. Why do you do all of this? To express an opinion thereon. Okay, let me take you through each of these words in detail. So please understand, there are only 4 parts of definition. What, of what, whose and why are you doing this. What is audit? Independent examination. Of whom? An entity. What kind of an entity? I mean of financial information. Of whom? Of an entity. What kind of an entity? Whether profit making or not, irrespective of its size or legal form. And why are you doing the examination? When such an examination is conducted to express an opinion thereon. So keeping all those things in mind, we're talking about independent. What do you mean by independent? Guys, independent is all about being on our own. Or in other words, independence is about not being subordinate. Not being subordinate. Not being subordinate to the wish or will of others. Of course, we will have a greater discussion about all these in the requisite chapters, but right now, what is independent? Not being subordinate to the wish or will of others. That is what it is all about. Then talk about financial information. Now, see, instead of using the word financial information, if I just say financial statements, then you are restricting yourself only to the balance sheet, P&L, cash flow, only those documents. But it should not be like that, right? So therefore, how it should be? Of financial information, which means you will pick up financial statements, and to support yourself from financial statements, you will also pick up all the books, papers, vouchers, contracts, everything. Books, papers, vouchers, contracts, agreements, by whatever name you call them, you will check all of those. And I'm even saying etc. Whatever are relevant in this context, you check all of them, right? So that's the most important part here. Independent, not being subordinate to the wish or will of others. Financial information is nothing but financial statements, nothing but books, papers, vouchers, of course, contracts, agreements, etc. And of whom? Of an entity. Now when I say entity, what is it? It could be a sole proprietor, okay, or it could be a partnership, it could be a company, it could be trust, society, anything, trust or society, you name it, all of it are entities, irrespective of whether they are small, medium, large, whatever size they are, and of course, irrespective of its size on the legal form also. It has so many legal forms, it could be in any legal form. That is what is the main idea of setting up what exactly is the word entity. So, what are we talking about? Independent financial information of an entity, irrespective of its size. It could be small, medium, large, all that. Legal form, it could be in any of these legal forms. Okay. Then most important question, why? Express an opinion thereon. If you conduct the audit, and then you will be able to express a opinion. Now please understand, we are just giving an opinion on the financial statements that we have audited. Now we are not giving any assurance that the future of the company will be great, we will take care of it in the future. No, that is not the thing that we are doing, because we are not astrologers, we are just auditors, and what we are doing here is just to tell whatever has happened in the financial year of audit, we have reviewed it, and we come to a conclusion that the financial statements, whatever we have examined, they are expressing a true and fair view. Now these are the words that are used. What is it? True and fair view. So once again, to recollect and understand the facts that you've learned, four very important points you've learned in the definition of audit. What is audit? Audit is the independent examination of financial information of an entity. And what kind of an entity are you talking about? Irrespective of its size or legal form, right? Irrespective of its size or legal form, when such an examination is conducted to express a opinion thereon. 1, 2, 3, 4 points. Everybody, I hope this particular thing should be clear for you here. So you are not being subordinate to anybody's wish or will, which is what is called as being independent. At the same time, financial information not only talks about only what do you say, financial statement. We talk about books, papers, vouchers, we talk about all of them. Understood? So it's very important to understand the term financial information, because it's a inclusive term of all these: books, papers, vouchers, contracts, agreements, you name it, and you have all of that, right? So that is what is the idea here. And then moving up next is about the word entity, irrespective of any of those, profit making, non-profit making, all of those are entity. And then we are doing this to give a true and fair view on the state of affairs of the company. So very, very important and basic definition. Never by heart any definition. Always go by understanding the logic. See, like I told you, the questions are there in English language. Raise those questions, get the answers, and I hope we'll be making it very easy for you to do this. Alright, moving next, we are going to talk about how exactly the institute is setting up standards in this case. So to take you through that quickly, of course I'll take you through that in the first chapter, but right now just have a brief understanding. There's a body called IFAC, International Federation of Accountants, IFAC. Now what does IFAC do is it has a wing called IAASB, which is the International Audit and Assurance Standard Board. It sets up. Now looking at IFAC, what we do is IFAC, that is ICAI is a member of IFAC. One of the premium bodies in the world is IFAC. ICAI is a member of that. Now once ICAI is a member of that, ICAI also has a body called AASB, which is the standard setting organization from the point of view of ICAI. What they do is they set up standards. They set up 5 different types of standards. Like you see, there are standards on auditing, then we have standards on review engagements, we have standards on assurance engagement, standards on related services, and then we also have standards on quality control. So you have around 38 standards on auditing, 2 SREs, 3 SAEs, 2 SRS, and 1 quality control standard. In all, you have 46 standards issued by institute to fulfill various aspects. Not only audit is a very key activity, so 38 standards are there. Apart from that, even if you're rendering any other services, right, there also, you can look at it in this form. So all these standards are there, totally 46 standards are there for us coverage to understand how audit is being done. Then for us right now, the coverage you're picking up standards on auditing. So if you break up to the standards on auditing, what exactly are the standards on auditing? So you have all these standards broken down from the 100 to 899 series. 100 to 199 are introductory matters, so all the definitions, other things and basic stuff is given there. But when you look at what exactly is the two series of standards, 200 to 299, we have 9 standards here. 300 to 499, we have 4 standards of the 3 series and 2 standards of the 4 series. Audit evidence, this is the key block of discussion. Audit evidence, 11 standards are there. Unless the auditor obtains sufficient appropriate audit evidence, he will not be able to give a proper opinion. Therefore, these 11 standards help you get. And audit is not a lone activity. You alone cannot do and finish off something. So it will take the help of others. Whether you can rely on the work that others are doing or you cannot rely, it will be dependent on the 6 series. 3 standards are there which will help you to decide whether you can use the work of other auditors, internal auditors and experts. And then at the end of the day, we just learned in the definition that we have to give the opinion. Opinion will be expressed in the form of a report. How to prepare the report, what contents to go in the report, how will we go for it, all those are discussed in the 7 series. With the latest inclusion of standard number 701, you have 6 standards in the 7 series. And of course, 3 special considerations are there in special cases only, not in general case of audit. You have 3 standards in the 8 series that do up. So that makes it around 15, 26, 29, 35 and 38 standards in all. So it's a very extensive coverage of all the standards. There is no panic about doing an audit because standard supports us everywhere. It is going to help us tell what to do, how to do it, at what point of time we will be doing it. All of these points are very clearly expressed when we talk about this particular standard discussing issue. Moving next, we are going to talk about the 8 steps involved in audit. Of course, in my next video that we are going to start the chapter with, I'm going to discuss all these 8 steps in detail once again. But just let me take you through these 8 steps now. Is about step number 1, auditor will be engaged. That is appointment of the auditor and engagement of the auditor. Then once you are appointed as the auditor has to obtain knowledge of the client business. Is supposed to take stock of the knowledge of client business. Formulation of the audit program. The entire 3 series will be understood here. 300 and 320 as well on materiality. After that, using 315 and 330 will determine the nature, timing, and extent of audit procedures. And of course, the 5 series and 6 series will help you gather all the evidences. And documentation is one of the most important aspects of audit. Irrespective of how much audit you do, unless you document what is supposed to be documented, you will not be able to get that confidence. So document whatever you are supposed to document. And then standard number 700, 705 and 706. These 3 standards, of course, including 701, will help you draw conclusions right now. So this is an 8-step audit process. It has to go on a stretch. It will go on, and we will start with 210 in our next video, where I will also explain these 8 steps in detail once again to push on what standard number 210 is all about. So in this introduction, we are going to see the basic principles that are there in the audit as part of what it is. So we will move on to discussing some of the basic definitions that are required. And standard number 200. Standard number 200 is telling that we have to conduct our audit in accordance with the standards on auditing. So just now you discussed that 38 standards on auditing are there and how to use those 38 auditing standards and get the audit done. The coverage of standard number 200 is exhaustive, very clear about everything, pretty much extensive coverage of all the basic things like what is the purpose of audit, scope of the audit, what are we doing. Why would we obtain only reasonable assurance and not absolute assurance? 4 inherent limitations are there in audit, which we will be discussing, and of course, ultimately, what are the responsibilities of the auditor while doing the audit. These are very, very important things that we need to discuss. Let's start off with discussing the 2 very simple things, purpose and scope of audit. First up, Why are you doing the audit? Now, if you do audit and give an opinion, who is getting benefited? Purpose is served because you are giving trust. I told you audit and assurance go hand in hand. We are giving that assurance to somebody, right? Confidence is given to the users. Confidence. Instilling confidence is nothing but assurance. Instilling that confidence is what all assurance is about. So if you look at the purpose and scope of the audit, to the users you have to give confidence. So confidence to the users of financial statements regarding their reliability. Who are users of financial statements? I hope you know it by now. Users of financial statements are nothing but the company themselves, or probably for that matter bankers, lenders, creditors, research analysts, investors. So many users of financial statement are there. Randomly, if you only prepare financial statements and give it to them, they may not want to believe it. So what will they do? They will believe it when you give confidence to the users using the audited set of financial statements. Apart from that, auditor expresses opinion whether the financial statements are showing true and fair view. So as you have 200, stand number 200 in front of you, you can underline true and fair view in accordance with the applicable FRF. In accordance with the applicable FRF. Okay, so that is the main purpose of the audit. What is the main purpose of the audit? The purpose of the audit is to express an opinion. What kind of an opinion are you talking about? The true and fair view of the opinion. Scope of audit. What is the scope of audit? The auditor's opinion does not give, like I told you, see, we are not astrologers or future tellers to guarantee next 5 years the company is going to be fantastic. How will we be able to tell that? It's just a matter of fact. Auditor's opinion doesn't give any assurance. Auditor's opinion doesn't give any assurance on the future viability or efficiency or effectiveness of the company. Okay, we are no way concerned with any of that. How will you be able to tell, right? The future auditor has to check. The auditor has to check whether the financial statement comply with the FRF. FRF means financial reporting framework, like how the companies have to report according to the Companies Act, Schedule 3 of the Companies Act. Like that, every company will have a financial reporting framework which they have to follow or not. An audit to be conducted in compliance with the laws and regulation. Make sure that the audit is being conducted in compliance with the laws and regulations. Understood? Very, very simple. Scope. What is the scope of the audit? It is about giving an opinion that is on the true and fair view. That's all. That is the main idea. You are not going to establish anything about the future. Okay. Obtaining reasonable assurance. How about auditor obtaining a reasonable assurance? There is an important question, but for which we need to know the definition of what reasonable assurance is. What do you mean by reasonable assurance? Now let me bring you back to this in a minute after we learn the definition of reasonable assurance. What do you mean by reasonable assurance? In the context of audit of financial statement, it is a very high but not absolute assurance. Absolute assurance is required in case of investigation. Okay, absolute assurance will be given in case of investigation, not in case of audit. Now when police are doing, it is not called police are doing audit, police are doing investigation. Why? Because they need conclusive evidences, but as an auditor you need only persuasive evidences, which means you are only obtaining a reasonable assurance and not any kind of a absolute assurance. Understood? That is what is a very important thing. Let's go back here to find out. We'll come back to the other definitions. Now moving next, obtain reasonable assurance whether the financial statements are free from any kind of material misstatements. And misstatements occur because of two reasons. One is fraud, other one is error. Error is unintentional while fraud is absolutely intentional. Whether financial statements are free from material misstatement, that is the question, and the answer is yes. Financial statements are free from material misstatement, then you can give a true and fair opinion. Whether financial statements are free from material misstatement which may arise due to fraud or error. Reasonable assurance has some inherent limitations, obviously, because you are not 200% sure, not even 100% sure for that matter, because based on the evidences that you are obtaining, you are thinking that it is reasonable assurance, right? So most of the audit evidence are persuasive rather than being conclusive. Like conclusive means final. Okay, persuasive means you can still persuade and get more and more. Always, if you do more audit, you can get more evidence. It's always like that. Okay. So if the auditor obtains sufficient and appropriate. Now, when will you call sufficient and appropriate? You are obtaining all the audit evidences, right? The auditor is going to obtain all the audit evidences to say, yes, this financial statements are true and fair. When will you say this is enough? This enough call is taken based on these two words, when it is sufficient and appropriate. See, you pick up so many documents sometimes, they may be sufficient as a bunch of papers, but they are not appropriate, then useless. Same way, if you pick up only one very appropriate document and it is not sufficient, then also it is not cool. So I'll explain you these two words, sufficiency and appropriateness, when we deal standard number 500 in detail. But for now, we're talking about sufficiency, which refers to the quantum of audit evidence, and appropriateness, which refers to the quality of audit evidence. Then it may be useful to reduce the audit risk to a acceptably low level. You cannot make audit risk 0, so you can only bring it down to a acceptably low level. If the auditor obtains sufficient and appropriate audit evidence, then it may be useful to reduce the audit risk to an acceptably low level, bring it down to a acceptably low level. And then talk about inherent limitations in the audit. One of the very important concepts, of course, all these are something that you must have studied at CA Inter. So, if at all, what inherent limitations are? There are only 4 inherent limitations. See, the very nature of financial reporting, if you say that, means that is because of including judgments and estimates. Judgments and estimates are part of the balance sheet or not? Yes, judgments and estimates, they are pretty much part of the balance sheet in P&L, like items like depreciation, provision, all these are, something that actually are forming part of the balance sheet and P&L, whereby what is happening, whereby they are causing a, you cannot say something 100%. Now I'll give you an example here, like say for example, fixed assets are there. Okay, fixed assets, with respect to fixed asset, gross block, that means whenever you purchase whatever capitalization value, let's say 5 crores, then what are you doing? Depreciation on those assets, you are charging, let's say 1 crore. Net value outer column, you are taking 4 crores. Now, see, 4 crores is a result of reducing 1 crore. How do you know that asset will depreciate only 1 crore? So that is an estimate or not? So it is just an estimate. So you can never say the numbers in the financial statements are absolutely correct. You cannot say that. Correct is not the word you can use. That's why you use the word fair. Yeah, they are true and they are also fair. That's all. That is the only thing that we can say, and we cannot say that they are absolutely conclusive and all that stuff. Okay. The nature of financial reporting is that the very nature of audit procedures. Next, see, okay, financial statements are prepared using estimates, judgment, maybe there is a lack of accuracy, all that we are talking about. That is on their side from the management's perspective, but that is also coming as our limitation. So are we doing 100%? Question that also. No, we might be resorting to techniques like sampling. Okay, so where sometimes we might not be doing the 100% in the audit, so that could again lead us to something which will not be able to get you a conclusive evidence. So there are inherent limitations in the audit. That one, the very nature of financial reporting itself is like that. Two, the nature of audit procedures are also like that, where you cannot establish a conclusive evidence. The need for audit to be conducted, within a reasonable period of time and reasonable cost. Okay, though they are not reasons for you to tell that this is the situation, but otherwise, if you give me audit and then tell me finish off in 2 weeks, finish off in 3 weeks, you're putting pressure on me, then I might not be able to do it successfully. That is also something that we need to check out. The reason, there is a need for the audit to be conducted within a reasonable period, and sometimes the amount of money you're looking at, for this audit who will spend so much, like what we are getting and what time we are spending, they're not matching. That, see, limitations with respect to time and cost, they should not end up as the reasons for why you didn't do the audit properly. But sometimes they do, like where 6 weeks are required, if they give you 3 weeks to finish, you'll obviously rush up. you may not be able to do everything convincingly, and thereby again you are only giving a reasonable assurance but not a absolute assurance, which is again one of the very important points. So these are inherent limitations. Of course, other limitations are there, like internal controls are set up by management. If the management themselves are breaching it, so inherent limitations which are there in internal controls also add up to inherent limitations in audit. And if anybody is doing fraud, now somebody who does fraud will not write on that I did fraud, or will not put a red dot to indicate that this is a fraudulent document. Okay, so they will do fraud and they will find carefully, hide it nicely with their well designed schemes, and you need to be sharp enough to find out. So how do we need to be sharp enough? Yes, you need to have a quality of professional skepticism. Now what is that and how it is, we will discuss that as we move on. So that is what is the next point, obtaining inner reasonable assurance for the audit and understanding what the inherent limitations are. Okay, I'm going to take you through some very important definitions here. The first one is talking about what is an applicable FRF, financial reporting framework. Nothing but according to the law, what sort of financial reporting framework you are supposed to follow. Like for example, for companies, they have to follow the Schedule 3 of the Companies Act. For bank, they have to follow what is told in the Banking Regulation Act. For the insurance companies, they have to follow what IRDA tells them. Electricity companies, the act they have to follow. So different formats are there sometimes for different companies. So the framework in which financial statements are prepared and reported, that is what is called FRF, Financial Reporting Framework. The financial reporting framework is adopted by management because it is a responsibility of management, and where appropriate, of course, TCWG. Now you have to understand who is management and who is TCWG, right? Let's go one step further here. We talk about who these people are. Management are those people who are having executive responsibility. Executive responsibility means who do the work daily on a day-to-day basis for the conduct of entities' operations. Then who are those charged with governance? These are people who are one step above the management, persons or organization with responsibility for overseeing the strategic direction of the entity and obligations related to the accountability. They are just bothered with overseeing. That means their responsibility is to check. That is, there is a governance role. They don't do work but they govern. Understood? So coming back to the definition, you understood who is management. Management are charged with daily responsibilities. Those charged with governance are the governance roles. The financial reporting framework adopted by management and where appropriate TCWG in preparation presentation of financial statement which is acceptable in the view of the nature of the entity and the objective of financial statements, or that is required by law or regulation, which is required by law or regulation. The term fair presentation framework. Now, see, you are putting up and reporting in any financial reporting framework. You can prepare a T-shaped balance sheet also. The question is, are you supposed to prepare in that format? That will be answered by law. If law says you have to prepare in Schedule 3, then Schedule 3 is your fair presentation framework. For a company to achieve a fair presentation, the Companies Act is suggesting that you go by the Schedule 3. Understood? So, sole proprietor is there. Nobody is guiding him with any law. You can prepare T-shape also. Nobody will stop you. Understood? If you have to reflect the organization or the entity's performance clearly, then you might as well have to present it in the format that is required, for them, which is nothing but called the fair presentation framework. The term fair presentation framework is used to refer to a financial reporting framework that requires the compliance with the requirements of the framework. You have to comply with that. Whose duty is to comply? The management. It is the responsibility of management for preparation and presentation of financial statements, and they should acknowledge explicitly or implicitly that they will achieve fair presentation of financial statements. It may be necessary for management to provide disclosures beyond those specifically required by the framework. Sometimes to achieve a fair presentation, you might have to breach. That's not a regular situation, that's an exceptional circumstance, but still you have to present it in the most fair possible manner, and you have to give disclosures of what you did to achieve the fair presentation. Not only that, acknowledges explicitly, who the management acknowledge explicitly that it may be necessary for the management to depart. This also in, see, this departing from requirements is an exceptional circumstance, very rare. exceptional circumstances. They are not a daily situation. Okay. Acknowledge explicitly that it may be necessary for management to depart from a requirement of the framework to achieve fair presentation of the financial statements. Such departures are expected to be necessary. Such departures are expected to be necessary only in extremely rare circumstances, not a daily situation. Understood? But if management is doing so, they might as well have to give clarity on that. Okay. Then what does the term compliance framework mean? The term compliance framework, is used to refer to a financial reporting framework, that requires the compliance with all the requirement but does not contain any acknowledgements like these. Okay. So you can prepare it in any format. If you are able to comply to show that it's matching the laws, rules and regulations, you can comfortably go about it. Now that's exactly what fair presentation framework and compliance framework are. Understood? So these are all the basic definitions that are there as part of standard number 200. Of course, management, TCWG, reasonable assurance, and now we're going to get to one of the most important concepts in audit called professional skepticism. What is professional skepticism? It's an attitude. The auditor has to carry this attitude. What attitude? That includes an attitude of questioning mind, right? And being alert to conditions. So, whenever you're talking about professional skepticism, right? So, when you're talking about professional skepticism, you're talking about two things. That is, one, having a questioning mind, and two, being alert to conditions. So please understand, blindly you are not supposed to accept anything, and at the same time, don't doubt everything unreasonably. Both are waste of time and dangerous also. You are accepting something, now that is dangerous. At the same time, you need to look about or worry about how it works. So you have to have a questioning mind and what be alert to conditions, and then that won't have an attitude. Auditor should have an attitude that includes a questioning mind and being alert to conditions which may indicate possible misstatement. So if you are alert, you will be able to find out what the possible misstatement is, how is it, and then based on that you can see if there is any possibility of fraud. An attitude that includes a questioning mind, being alert to conditions which may indicate possible misstatement due to error or fraud, and a critical assessment of evidence, and a critical assessment of the audit evidence, how it works and what it does is something that we need to see there. Alright, let's go to the last part of the story here. We're going to discuss 5 points, and there are no excuses for not following these 5 points. You have to compulsorily follow as an auditor. These are the responsibilities of the auditor. You have to compulsorily follow, and we will discuss in the very first chapter all this in a greater detail. But as a matter of fact, here we are talking about ethical requirements. What are those? First up, auditor should have integrity, which means being honest, sincere and straightforward. Auditor should follow the code of ethics. That means comply with the Chartered Accountants Act 1949. Auditor's work should be unbiased, no partiality, follow objectivity. So you have 3 words here, IOI, which is integrity, objectivity and independence. These 3 things, they should mix with the blood of the auditor, right? The so important qualities: integrity, objectivity, independence. Of course, you should be educated enough to become the auditor. Professional competence, which means nothing but the qualification. What is the qualification that you're looking at? A chartered accountant holding certificate of practice. A chartered accountant holding a certificate of practice is the person eligible in India to conduct the audit. And most importantly, client trusts you so much and they share a lot of information with you, right? You cannot go and tell all that outside. Therefore, it is very important for you to maintain confidentiality. What is confidentiality? Is to not disclose the client information, to any third party, unless obtained client approval. Client himself is permitting, gave an approval, not a problem, right? Unless is obtain client's approval in writing, or there is a legal duty to disclose. When any legal duty is there on you to disclose, like say any officer of the law is asking you, that time you cannot say confidentiality, that time you open your mouth, and that is because he is also not asking for his personal benefit, he is also asking to comply a particular law. So what is the rule of confidentiality? The rule of confidentiality says that auditor shall not disclose any information obtained during the course of the audit unless permitted by client, that too by statement in writing, and it is required by law or regulation. Rule of confidentiality. Rule of confidentiality says what? Auditor not disclose any information. Okay, and what are the two exceptions? Permitted by client, and if it is required by law or regulation. In both those cases, it is pretty cool that you can go further and disclose. That is not breach of confidentiality. Ethical requirements number 1. 2. Professional judgment. Look at the auditor down there is thinking so much. Yeah, there is no excuse for not following professional judgment. Of course, for all these 5 points you see that, right? The person in question is thinking so much right there on screen. Why is he thinking so much? Because to arrive at a judgment, now because it is your professional judgment, there is no book that is going to support your professional judgment. So it's very important to understand how you got to take the judgment. Important to take proper decisions. It is important to take proper decisions while performing the audit. And not only that, whenever you're talking about judgment, it has to be firm judgment. Okay, you cannot one day take okay, I thought like this, then next day you're changing like this. It should not be like that. Okay, important to take proper decisions while performing an audit, and it refers to application of relevant training, knowledge and experience obtained in the field of accounts, audit and law. So whatever you studied, all these, think properly. All right, just like how the auditor is doing here right on your screen, thinking so much, right? So it's very important to take a firm judgment. Before you make a judgment, think about it, because you cannot keep revising so many times. You can revise, of course, but you cannot revise it so many times. So make a very firm judgment. That's what is the basic requirement of audit. Responsibility number 2 of the auditor. 3 is to follow professional skepticism. Like I told you, these are 2 aspects: having a questioning mind, 1, and a critical assessment, that is being alert to conditions whereby one source is contradictory with other, and thereby questioning the reliability of document. Now, like say you went to an employee and asked him what is the rent. He told you, we are paying rent 40,000. Then you picked up the rent agreement. There you see 50,000. Oral evidence is saying 40,000. Documentary evidence is showing 50,000. Which one is correct? So either of them would be correct, but something is, the employee might have forgot and told 40, actually it may be 50. So don't jump to a conclusion that it is a fraud, but yes, analyze that and understand what exactly. There is a possibility of fraud, such a thing. Having a questioning mind, getting answers to them and being alert to conditions is called what? Professional skepticism. This also is a quality that has to mix with the auditor. Identify the areas where there is a possibility of the occurrence of fraud. If situation demands, the auditor can go for additional audit procedures. Then, if the auditor feels that management or TCWG, are giving incorrect or wrong information, that means they are not giving information up to the mark, they are giving incorrect or wrong information, then the auditor can go for further audit procedures. Auditor can accept the records and documents as genuine. Auditor can accept records and documents as genuine unless there are any contrary. Don't doubt every document. If you see something in contrary, then only, say, till then you can believe that okay, what they gave is genuine. No, don't again blindly believe that everything that they give is genuine. So keep the mind very open about this, have a questioning mind and then go for it. Responsibility number 4 is audit evidence and audit risk. Yes, the more evidence you collect, lesser will be your risk. That is why you are talking about obtaining sufficient, appropriate audit evidence to reduce the audit risk. Can you reduce audit risk to 0? Right? Audit risk becoming 0 is not a chance. Audit risk becoming 0. This is not at all a chance. Why do you say that? Because there are inherent limitations and definitely there will be something, right? obtain sufficient amount of audit evidence to reduce audit risk to an acceptably low level, reduce risk to a acceptably low level, and thereby enable the auditor to draw reasonable conclusions, thereby enabling the auditor to draw reasonable. We are not pulling out any absolute assurances, right? And thereby enable the auditor to draw a reasonable conclusions on which to base the auditor's opinion. Please understand, the auditor cannot expect the risk may reduce to zero. Once again, I am telling, reducing to zero is not a chance. Okay, you can see that pretty much clearly. And the last responsibility of the auditor is to conduct the audit according to standards. For every aspect that arises in an audit, a standard is there in place. 38 standards are there, like I told you, including special cases. So yes, it is the duty and responsibility of the auditor to comply with the standards on auditing. The auditor shall comply. There is no choice. If you feel like doing it, not. You have to. The auditor shall comply with all standards relevant to the audit. The auditor shall have an understanding of the entire text of the standards, which is what we are going to do right from the next video. We are going to pick up all the standards and understand how they are going to be dealt with. And not to represent compliance with standards in the auditor's report unless complied standards and auditing to the audit. If you don't comply with standards and auditing, don't mention in the report that you did the audit in accordance with standards. Understood? If an objective is of a relevant standard cannot be achieved, now this is slightly out of the box. Generally, we'll be able to achieve, but if an objective in a relevant standard cannot be achieved, the auditor shall evaluate whether this prevents the auditor from achieving the overall objectives of the audit, and thereby, if at all required, see, when you are not able to obtain evidence also, you cannot go and say we'll give true and fair opinion. No, if it prevents you from obtaining sufficient evidences, then the auditor has to modify the auditor's opinion, or you might want to even resign, withdraw from the audit engagement. So don't worry about that piece. In different standards, when we encounter those situations, we will discuss all of that in detail. So for all these 5 points, absolutely no excuses that you can follow, and then that's exactly what we are looking at in terms of the 5 responsibilities of the auditor. So what is the purpose of the audit? Scope of the audit? What is reasonable assurance? What are the inherent limitations? And of course, there are 5 responsibilities for which there are no excuses and the auditor has to follow them, have been discussed with you in stand number 200. Alright, I'll see you in the next video. We'll come back and catch up the 8-step audit process in detail, and then we are going to expand the discussion of how those 8 steps will be fulfilled by compliance to various standards, and I'll see you with the first standard on that lot, engagement of the auditor, in the next video.